Hey everyone, how we doing out there today? This is the Flip Flop Investor Show, and I am your host, Todd Bayer, the Flip Flop Investor himself. Every week we get together, talk about real estate investing here in the Inland Empire, and every week I like to bring on a local expert, somebody who knows what they're talking about in real estate. And this week we have one of the hardest guests I've ever had to get onto this show. You know, usually people are beating my door down trying to get on this show, but today I had to beat this guy's door down. He is not just my accountant, but many people's accountant in the real estate investing world. Brook Horspool, how you doing today, Brook?
Oh, Todd, I'm doing fantastic. Thanks for having me on.
Absolutely, man. Glad to have you finally. You know, I actually you were going to come on a couple weeks ago or a few weeks ago, and you had to cancel last minute, which was fine. No hard feelings. But I had people ask me while the show was going on where you were, because I had told so many people that you were coming on. And they were like, like, what happened to Brook?
Hey, I got tired of the hitman watching me drive around the Inland Empire, and I knew it was time to get out here and get on the show.
Exactly. Okay, so you got my message then.
Oh, yeah. Good. Message was received.
Good. So I met you through Ed Hoffman.
Oh, yes, Ed.
And Ed runs Wholesale Capital Corporation out of Moreno Valley. And I was actually borrowing money from him to do some deals, some real estate deals. And, I eventually talked to him at one point, like, who do you have doing your taxes? Because I had a friend of mine doing my taxes. And, I think that first year I made no money, and I seemed to have to pay like $8,000 in taxes. So
that's creative accounting in the wrong direction.
Yeah, creative for the IRS, I think. They found some great ways to tax me on stuff. So how's that volume for you? Is that good?
That's perfect.
Okay,
yeah,
good.
Thanks.
Yeah, I was just, for those of you watching at home, you saw I was messing with the microphone volumes or the headphone volumes because, it can get loud in here.
For those of you watching at home, I'll dress up next time. I'm wearing pajamas right now.
Well, there are some people watching live right now on YouTube, and, thank you all for tuning in. We really appreciate that. Now you know what Brook actually looks like and what I look like.
For those of you watching on YouTube, this is not vodka. This is water in my flask here.
Yeah, I know it says vodka on it, but it's not actually vodka. So I met you through Ed, and Ed said you should go talk to this guy, Brook. He's been doing my taxes for, I think at that time it was a couple years or so.
Yep.
And he basically said Brook knows what he's doing. So I went and met with you reluctantly, and met with you, and I was like, okay, this guy is an Eagle Scout, which I really like because I'm an Eagle Scout. And, my business partner, Steven, also an Eagle Scout. So we had that to kind of go on. And I just happen to trust Eagle Scouts. I don't know what it is.
I think it's part of the Scout Law. We're trustworthy.
That's true. It is actually the first law of the Scout Law.
Yep. Yeah,
trustworthy, loyal, helpful, and all those. I can still recite them. I just don't know if I want to show my inner nerd that much right now. So we talked for a while, and I think I showed you that tax return that the previous accountant of mine had done, and we ended up, I think, not only getting all that 8,000 something back, I think we got more back on top of that.
Yeah, it's easy to make mistakes if you don't know what you're looking for, and we're happy to look at things and make sure it's done right.
Mm-hmm. So what are some common things you've seen people do? Because obviously when you're flipping a house, let's just take a flipper, for example. Here's a guy who doesn't have a job, and he flips one house in the year. All right. So this guy, he buys a house, and the profit he shows on the deal at the very end is, let's just call it $20,000.
Okay.
He makes $20,000. That's all he did all year. So we're going to make it really easy. There's no W-2 income in this to mess everything up or anything. He's a walking, talking business, right?
Yeah. So if you're just flipping one house, you have the option on how you want to report that. If you want to do it as a business on a Schedule C, versus a capital gain situation where you're going to pay preferential treatment on that.
Yeah.
But once again, it's going to depend on your overall scenario. If you have kids and you have ways to generate certain credits, you're going to want to run that on a Schedule C and get some refundable credits versus a capital gain where you will get nothing.
Right.
Except for a tax bill.
And you pay on that gain.
Yeah.
So, okay, he's got a dependent now. Let's just say the guy has a kid and a wife or something like that. They're married, filing jointly. He's got a dependent. He's like, Putting away the phone now.
Well, I just don't want
Don't want to distract from this. You
yeah,
know?
everybody's listening and texting me that they're listening to me on the radio. This is fantastic.
Oh, yeah. Oh, man. We're going to open up the phone lines in a little bit.
I didn't know you had such a huge following. I mean, my phone is literally blowing up right now.
I can't believe it. You know, actually, I can. You know, I can completely believe it. This show is heard around the world. You know, people tune in specifically for it, and we appreciate all you tuning in for that. But the so this guy, he has a kid, and he's got a wife, married, filing jointly. He still makes $20,000, but he's a business, so he's going to file as a Schedule C, right? He's putting everything on a Schedule C.
Correct. Yep. That if you reflect it as a business, you can potentially qualify for certain credits. Once again, each individual's situation is going to be different. Mm-hmm. So we absolutely recommend that you sit down with your advisor and make sure that you're getting the best possible scenario worked out for you.
Of course, yeah, and that's what we would recommend. That you sit down with your person. This is just for example purposes. This is not anybody in particular. And even if the situation sounds like your situation, it's not for you. You should still talk to somebody
who knows your entire situation.
Right, exactly.
Yep.
You know, even if I describe it to the T,
it's still not right.
It's still not you. So talk to your real people. So that being said, okay, you know what? When I first sat down with you, I didn't know the difference between. I didn't even know that there was a Schedule A and a Schedule C and all this. Is there a Schedule B?
There is a Schedule B.
See, I don't know that. This is an area that I'm very unfamiliar with. That's why you're here.
I'm happy to answer any and all of these questions.
Yeah, you think we should open up the phone lines?
You could open up the phone lines, and I will be glad to
take some calls.
Yeah, happy to help people out.
How about this? If anybody here wants to talk to a real CPA that knows real estate investing, taxation, and so forth, you can call in. The local call-in line here is 909-792-5222. And if you call in, we'll take your call. And as long as you don't, as long as it's relating to real estate in some way, we'll answer your question to the best of our ability. So yeah, again, that number is 909-792-5222. And call in. And if you...
And truthfully, if we don't know the answer, we'll schedule an appointment and charge you $1,000 an hour to come in and get some good advice.
And we'll figure out the answer between now and then.
Oh yeah, we'll look it all up and
it'll be worth the $1,000 consulting fee. Yeah, I promise. I don't guarantee it, but I promise. Okay, so Schedule A. This is for people who, you sort of have a side business or something?
I think taxes are really boring. What I really want to know is, how did you get the nickname the flip-flop investor?
Well, okay, so most of the people know this already, but, it should be obvious to you. You should know this, but it's because I wear flip-flops mostly is my preferred footwear, and I invest in stuff. So the flip-flop investor.
So it's very self-apparent once you see you.
Once people see me, they're like, okay, that makes sense. And then I also have a shirt that says the flip-flop investors on it, which just solidifies it even more.
So let me ask you this. If I were to come work for your firm, mm-hmm. would I be issued flip-flops or would I have to go buy my own?
You got to get your own, yeah.
Okay.
Yeah, unfortunately, which, falls under an interesting tax thing, right?
Yeah, unfortunately, unreimbursed work expenses, if I were to buy my own flip-flops,
right.
Up until this year, I could write them off.
Yeah.
Starting in 2018 and going forward, you're no longer able to write off the cost of your flip-flops.
Really?
Yeah.
As an employee?
As an employee.
But I use them as a marketing tool.
Well, you can write them off because you're marketing
my brand.
And it's a corporation. That's the key, is you get away from being an employee, mm-hmm. start your own business.
Right.
The American dream.
Yep. And
then you can start writing things off.
So write-offs is probably for a lot of people a very foreign concept. People hear all the time that corporations write everything off, right? I'm sure, this stuff. It doesn't sound like foreign to you, but for a lot of people, they don't understand, how a write-off even works or whatever. So if you're a regular employee, can you write stuff off?
Up until this year, yes. If you worked for
a big company,
Boeing, and you were in charge of going around and visiting different locations, and Boeing had a reimbursement policy that excluded certain things, and you were incurring those certain things, mileage, or if you had to pay for your own hotel, travel that Boeing wasn't reimbursing you for. And disclaimer, I'm sure Boeing does reimburse for all of these
Right.
things.
Yeah, well, only if you stay at a Motel 6. If you decide to stay at the Hyatt, they don't
Then you're on your own.
Yeah, who knows? I've heard there was a company I remember that said that they would cover up to a certain point for a hotel stay, and it was like $60 a night or something.
Oh, fantastic.
Yeah, I'm like, but that's not that great of a hotel in a lot of places.
That brings me back to the caller who asked if you could camp in your front yard. So if you brought your own tent,
right,
then you'd be okay to
write off the tent.
Yeah.
So those types of things that you would have to pay for in addition that your company was not reimbursing you for up until 2018.
You could write them off.
You could write them off as an employee.
As an employee. But there's certain assumptions there that, one, that you're itemizing. Two, you're subject to a certain limitation, 2% of your adjusted gross. The first 2% rather gets tossed out. Above and beyond that, you can write those items off.
Okay.
So, for example, the perfect example of somebody who that would fit would be law enforcement. Law enforcement, they buy their own guns. They do their own, pay for their own range fees at times, uniforms, things. Are we allowed to say gun on the radio nowadays?
Of course you are. Yeah.
Okay,
you
good.
just can't say bomb.
No bomb,
Yeah.
gun. So if you're buying your own gun, not bomb, if you buy your own gun and have to pay for your own training, law enforcement uniforms, things like that, union dues, those are all expenses that you're going to incur as an employee.
Right.
That you would not be reimbursed for typically.
Right.
And those things, up until this year, you could then write them off on your taxes.
So now what? That just becomes...
That becomes I almost swore.
We
can't swear on the radio, right?
Well, you can, and Nick over there is going to press a button so that nobody hears it. But
Nick has the pause button, so...
Yeah, we appreciate Nick, especially when Steve's on.
It's just an hour of silence when Steve's on.
Pretty much, yeah. We just have to bleep the whole show. It's we put up one of those little technical difficulties signs in the window, and we'll be back with you shortly.
Right.
Plays a little Christmas tune.
Yeah,
yeah,
that's perfect.
So
if you now your question was what happens to you now. So now if you incur those costs, that's just the high price of having a job.
Okay, so let's just say this cop was making $50,000 a year. Like last year, if he was to report these things, let's say all that throughout the year cost him $2,500 or something.
Okay.
So what a write-off does is takes that $50,000, and when the IRS looks at his income, he didn't make $50,000. He took $2,500 off of that, and now his basis for taxation is at $47,500.
Correct.
Right.
With some other adjustments. But yeah, that's the underlying gist is you reduce your taxable income by that amount. You're writing off your taxable income or reducing your taxable income by a certain amount.
But I guess so he's probably already taxed because he's paid as an employee, right? So he's already paying every time he gets a paycheck, his tax is already paid for him. So
by him.
By him, for him. Yeah, I guess. Okay, yeah. He's paying him, but the company handles that through their payroll account and all that stuff for him. Yep. So since he's already paid all this in, that $2,500, would he get 100% of that $2,500 back?
Depends on how crooked his accountant is, but the reality is no. You would receive so let's just keep that same round number, $2,500. You would reduce your taxable income by $2,500, therefore reducing your tax liability by whatever your tax bracket is. So let's just keep it really simple and say you're in a 10% tax bracket, and you reduce your income by $2,500, you would save $250.
So because the taxes were already paid earlier in the year, theoretically he would get back $250 from the IRS.
Correct.
For that tax year, theoretically, and of course, this is not based upon anybody in reality.
No, this is all hypothetical.
Hypothetical. So, talk to your tax guy. But now, let's say that police officer was also an Uber driver in the evenings or something. He worked as a police officer during the day. He was an Uber driver at night.
Surprisingly enough, Todd, I must have seen at least 40 or 50 Uber drivers this last year.
Okay,
they're becoming more and more common.
It doesn't surprise me. I mean, I meet them all the time whenever I take an Uber,
Yep.
They always have these interesting jobs that I want to hear about during the day.
They're day jobs, yeah, fantastic. So as an Uber driver, you are self-employed.
Right.
So you get to write that off on a Schedule C. Schedule C is for people that work for themselves effectively. And all of those deductions are still there.
Is there like a percentage of income that determines whether or not you're eligible to put stuff on a Schedule C, or?
Nope, it's all actual. So whatever your actual income is and your actual expenses are, that's what you would in theory, report on your Schedule C.
So if I made $50,000 as a police officer, and I made $75 as an Uber driver, let's just say I did one ride and it was to the airport or something.
Yep. Realized it sucked and never went back.
Yeah, I never
Yep.
did it again. I mean, I still can report my expenses related to that on my Schedule C.
Correct.
Okay. So things I can write off of there would be things related to the business, like my phone. I could write off probably part of my phone plan, right? Not just the phone, but also the payment or the plan that I'm on.
Correct. Definitely a portion of that.
A portion of my vehicle payment or my vehicle interest.
Yeah, the way Uber reports is you would have your total mileage, and you would generally take the mileage deduction for that.
Okay.
So you would deduct based on whatever the federally established mileage rate was for that year.
For mileage, and that includes gas, right?
Correct.
And maintenance is supposed to be included in that cost?
Correct. Absolutely. Insurance, repairs, maintenance, everything.
Okay, so you can't write them all off individually.
No, it's either or.
Okay, so you could do it if you say, like, no, my insurance is unreasonably higher than they're giving me credit for.
Yeah, I'm an Uber driver. Now I'm going to pay triple.
Is
right?
that the case?
No.
No? You've never seen that? Or you don't get into it that far with these people?
Generally what I've seen, because those guys drive a lot and make a little. So if you do get an Uber, tip them. They need the money.
Yeah.
They're not making much. Help them out.
Okay.
Help out your local Uber drivers.
Your local ride-sharing people,
Yeah.
Lyft and Uber.
Absolutely. So generally, those guys drive so many miles that taking the mileage deduction is definitely more beneficial.
Okay. So, that's one thing for them. But let's just say, for example, that police officer flipped a house throughout the year, too. Same thing. He can now report the deductions on his Schedule C for flipping that house.
Yeah, if he wanted to. So now, once again, this is going to get very specific to the individual situation. If a police officer who had a wonderful W-2 and is doing a great service, once again, if you pull me over, I love police.
Right. Oh, yeah.
100% respect everything you do.
Absolutely.
So if you have a police officer who is receiving a W-2 and they flip a house, if they're flipping it and it takes less than a year, it's going to be taxes ordinance. This is going to get really nerdy, but follow along as best you can.
Yeah. I'll try. So I'm going to act as the dumb person.
Perfect.
It's going to be really hard. I'm going to act like a dumb idiot right now, so I can ask all the questions all the people are going to have out there.
So if you're flipping this house and it's just one house and you have a W-2, you're most likely not going to want to claim it on a Schedule C where you're going to pay additional self-employment tax.
Okay. Because the self-employment tax is already it's a set minimum, right, or maximum, or it's like a set number, isn't it?
It's an assessment amount based on self-employment income.
Okay.
So let's say going back to your very first example where you made $20,000 on a flip. If you had that $20,000 profit and you had a W-2 as well, you wouldn't want to claim that as self-employment earnings because you're going to pay tax unnecessarily.
Okay.
Whereas if it were simply capital gains reported on a Schedule D,
and it would be a short-term capital gain in this case because we did it in less than a year.
yeah. So if this lasted less than a year, short-term capital gains, you'd pay tax at the ordinary income rate, whatever your tax bracket were.
Okay. Which we said earlier was the 10%, but
Just for
this is
examples,
hypothetical.
yeah, totally hypothetical, non-existent. So 10%.
Does anybody get 10%?
Depends on how creative your accountant is. Yeah.
Okay. Nice. Do I have a creative accountant?
Oh, I think you pay negative 10% in taxes.
I kind of noticed that. I was going to mention something, but the IRS sent me a letter to that effect.
And if you work for the IRS, this is all hypothetical. None of this is real.
No, of course not.
No.
This is hypothetical. We knew somebody that did something like this once.
I read about it in a book.
He's in jail now. We don't need to. Yeah. You already got him.
His name's Wesley Snipes. He's
Yeah.
probably out by now.
Is he? I think he did get out.
I think so. Yeah. We've got the confirmation. He is out.
He's definitely out. We got the thumbs up from Nick.
Nick's our fact checker in the green room.
And he's also the guy that's taking live calls right now. If you guys have any kind of tax-related questions and you want to talk to a real-life CPA, Mr. Brook, Horspool, or you just want to ask me, Todd Bayer, the flip-flop investor, anything you want about real estate, you can call us. Local call-in line, 909-792-5222. We'll take your call live on the air. Could be a lot of fun for you. Could be a lot of fun for us. We'll wait and see. I can't wait to get these calls. I'm getting people texting me stuff, but that's not a question for that's not a radio question.
Are they asking you what brand of flip-flop you wear?
They were asking what time I'm picking up my son later. I don't know. Probably later. I'll text them back after the show.
Is that the police? Is he in custody right now?
That was the police. Yeah, they were. They picked up my son. No, no, he's. We're getting our haircut later.
Oh, you and your son are?
Yeah, we're due. Yeah, I'm getting. People are starting to ask what band I'm in. It's getting so long. What the name of my band is. Okay, so back to taxes and Schedule C's and whatnot. This police officer, he's now at a 10% tax bracket, because of his $50,000 earned income job, right? He's so now the gain, this $20,000 gain, he's going to get taxed at 10%, essentially, if we're going off that example.
Correct. Yeah, and if he were to claim that all as self-employment income, he would pay the 10% hypothetical as well as the self-employment tax.
Okay, but if we just did it as not a business, which means he's not taking any write-offs on it.
Correct.
So wouldn't he have to go based upon his gross income on that deal? Or can he write off any
That's a great question. So yeah, you would still write off all of the same costs associated with flipping that house.
Okay.
The purchase price, the rehab costs, everything else, just as you would on a Schedule C. So you're just building up the purchase price as well as the sales price, and you're going to have that spread, which is going to give you your gain.
Very cool. We got our first phone call.
Uh-oh.
Let's take it real fast. We got let's see, I think I clicked this button here. Is that Julio on the phone?
Good afternoon. I just tuned into the radio, and I took the opportunity to ask a question. Now, over the years, we saved up enough money, and we purchased a rental property.
Okay.
Now, we've invested money into the property because it was kind of a fixer-upper. And my question is, since we did purchase the property out cash, can we deduct it also, even though we already are a homeowner? This would be our second or investment home.
That sounds like a tax-related question to me. Brooke, you want to take that one?
I'd be glad to field this. Is this investment property set up as a rental at this time?
Yes, it's actually 2 units, so one of them is currently rented.
Is the other one one you're living in, or are they both going to be rentals at some point in time?
Both are going to be rental.
Oh, fantastic. So what you would do is you would set that up on a Schedule E. A Schedule E is where you report your real estate income and expenses. Now, even though you paid cash for that property, you still get the benefit of depreciating that property. So let's say that the property were purchased for $100,000. Obviously, it's not in California if you bought it for $100,000.
Yes.
Especially a duplex, right? So let's say you bought it for $100,000. You will take that property and you will depreciate it minus the cost of the land. So the normal split is going to be roughly 20% for land, 80% for the building. So you would depreciate that building, the $80,000 that remains over 27 and a half years. So all costs will be accounted for, deducted to offset that rental income you're receiving. I think that's a really great move, Julio. If you have any questions further, please let us know.
Great. Thank you.
Absolutely. Thanks for calling in. We appreciate it. Take care. All right. So that was a good question. And actually, when you say 27 and a half years for depreciation, it kind of got me thinking, because that's a method that some investors use to find deals, is they look for homes that have been, or properties that have been owned by an investor for 27 years, because since they can't claim the depreciation, they should sell, because they should probably sell or at least 1031 into another property, so it's one method that some investors use to find deals.
Yeah, if you 1031 up and get into a more expensive property, you'll be able to start depreciating again.
Exactly. So that 27 and a half year number is a very key one to remember.
Another great trick is to, if you own property and you're single, you can go marry somebody who's 98 years old, getting ready to pass away. When they pass away, you can step up your basis in the properties and depreciate all over again.
Just make sure you get it all in a trust. Yeah, I think Was it Anna Nicole Smith that did that? I can't remember.
I think she did it the other way around, though. She married somebody who was old and rich instead of somebody who was old and ready to. This is really horrible. I'm sorry I took us down this path.
Yeah, no, this is, hey, but it's the reality. People do it this way.
Right? It's tax planning, guys.
Yeah, tax and estate
gals.
planning and gals, yeah.
Guys and gals.
Yeah, we can't be excluding people or anything like that. So
Absolutely not.
we may have another call coming in. We're Nick's fielding the call right now. He's
Yeah, these lines are actually
Yep.
furiously. I think when people see that they can talk to $1,000 an hour CPA for free, they jump on that opportunity.
I would have jumped. Had I known that we were doing this for free, I'd have brought my own questions.
Oh wait, I'm not being paid?
Yeah, actually, no.
Oh, can I get a Flip Flop Investors T-shirt?
Unfortunately, no. I don't have one in your size. Yeah, I'd have to get, what, is that a large?
Actually, I wear a large. Thanks for noticing.
You're welcome. All right, we got, hit that button twice. All right, we got another call. Is this,
Stell?
Stell? All right, is this Stell we got on the line here? Nope, let's try this one. Stell, is that you on the line? Stell?
Stottle.
Stottle. Stottle McBakels, good to have you. How you doing today?
Pretty good.
Great.
I had a question for Brook.
Sure. How are you?
Pretty good. How are you guys?
Oh, not too bad?
Good. I'm a single guy, and this year I was supposed to claim 0 or 1 according to advice, and I forgot, and it's still 4.
You mean when you filled out your I-9?
Your W-4.
W-4, I mean? Yeah.
Yes. Yes, my W-4.
I shouldn't even be fielding these questions.
Todd, this was clearly for me, if you don't mind.
Okay, yeah, sorry, Brooke. I didn't mean to step on your toes there.
Sorry about that, sir.
Stottle, yeah.
Stottle. We'll keep Todd out of this. So you claimed 4 on accident, or you forgot to change it back.
Yes, from last year.
So your question is, how much trouble are you in?
Yeah.
A lot. Don't file your taxes. I'm totally kidding. Don't hang up. Let me answer that correctly.
Yeah. And if you were just now tuning in, stay tuned for the real answer.
So I'm supposed to go on the run now?
Yeah, definitely get everything you can, clear out your accounts, and run. That's option number 1.
Belize is nice this time of year.
Yes. The real option is, so you're saying single guy, no kids, right?
Yes. But I recently bought a house.
Okay.
Does that help?
That helps. Recently is in the
This
last
year?
few months or like the beginning of the year?
March.
March. Oh, perfect. So you'll have a decent amount of mortgage interest that you've paid and some property taxes. Looks like you probably got both payments of the property taxes in. That'll help somewhat. You'll probably still owe, depending on your overall tax situation. I'm not sure how much you make, and you probably don't want to disclose it over the airwaves. I think there's at least 6 million listeners. I'm getting 5 million listeners. So you probably don't want to disclose what you make over the phone. But if you claimed 4 all year, you're probably under withheld. What I would recommend is by January 15th of 2019, you can still make an estimated tax payment, and that will count towards your 2018 tax year. So what you would want to do is run a hypothetical situation with the best numbers you can, come up with the best estimate on what you think you would owe, and then probably make that estimated payment to avoid any penalties or interest for 2018.
And then what about the, because he had mentioned the amount of dependents that he had, that he wrote down 4. Should he change that?
Oh, I would absolutely go back in and change that as soon as you can.
Okay.
It's really common that people will, when they know they're going to get a bonus, or when they know that something's changing on a paycheck, they'll go in and go exempt, or just increase their exemptions. And most times, I would say 9 out of 10 times, people forget to change it back. Mm-hmm. They come to me at tax time and they say, "I think I'm in trouble." And I tell them, "Yeah, you're in trouble. But we'll figure it out. It's just money."
So does that answer your question there, sir?
Yes.
Mr. McBakels, we thank you so much for calling in. We'll talk to you soon. Thank you.
You too.
Take care.
Bye.
All right. Stottle McBakels. Kind of famous in some circles, Not many people have ever heard his voice before.
He actually has a radio voice. It was a great voice.
Really did, yeah. I should get Stottle McBakels on the show sometime,
It had a dense quality to it, which is great for radio.
Really did. Sounded, very radio-ish.
Yeah.
He definitely knew what he was doing.
Thick. Like he probably has a
beard.
really nice beard.
Yeah, probably.
Yeah.
I would imagine. Dependence, though, I mean, it brings up an interesting, because maximum you can put is 9, right?
On a W-2?
Yeah.
I mean, I'm sorry, on a W-4?
W4, yeah.
You can go exempt. Exempt is where you're going to have nothing withheld.
But how do you just claim that?
Yeah.
One
yeah.
day you just feel like it?
On a W-4, you can go in and check the box that says, I am exempt from taxes.
And so when you get your paycheck, you're getting the full amount.
Yeah, minus the Social Security and Medicare.
So those things are mandatory.
Yeah,
You
those
can't-
are mandatory.
You can't avoid those.
Nope.
But you'll be paying no federal, no state income tax through your employer.
Correct.
However, when
You'll pay it at the end of the year.
So if you feel that you can invest that money better than the IRS can, maybe that would be something somebody should consider. Or is this a really bad idea that I'm coming up with?
This is the worst tax advice you will ever get. Actually, it's fantastic tax advice if you are extremely disciplined.
Okay.
Most people will take
Spend
that
it.
money and spend it.
Yeah. So if you, let's just say, have a great method of investing in something, and you actually do have you're a pretty high wage earner, and it's not going to be like a couple $100 or something. You could theoretically put yourself down as an exempt employee, take your full paycheck minus Medicare and
Social
Security,
Yep.
and basically not pay any tax throughout the entire year. Invest that money if you're smart about it, and then at the end of the year, when you find out what your tax implication is, then invest the money.
Yes, and the reason why that's also not a good idea,
Mm-hmm.
I'll elaborate a little bit further. Not only will people spend all of their money,
Right.
But another reason that's a bad idea is if you haven't had money withheld on your W-2 and you owe money at the end of the year,
Mm-hmm.
you will be assessed underpayment penalties and interest on that money.
Really?
And you don't want to do that. There's
No.
no need to give the government extra money.
Okay, so this the reason why I'm asking Brook this. I asked him these things once, and this is what he told me, not to do it. So if anybody out there's getting any bright ideas,
It's not a bright idea. Don't do it.
Yeah, don't do it. Sometimes I bring these things up to help other people out because they have
That's
these
perfect.
questions.
Yeah, I mean, if you have any question, feel free to call or text Todd anytime, and he'll forward them on to me.
Anytime between 2 a.m. and 6 a.m.
Those are the best times.
Yeah.
That's when his phone's the quietest.
Or you could call, right now, call in at 909-792-5222, and we will take your call live on the air like we've done for Julio and Mr. McBakels. Again, that's 909-792-5222 to call in live. Talk to a real live CPA, and he'll give you some real life advice.
And a real live flip-flop investor.
A real live flip-flop investor. You get me. Nobody's going to ask me any questions today. I already feel it.
Well, they probably get you every week.
That's true. They do. And they've pretty much gotten everything I got now. I don't have anything else to give. Unless you come up with a good question, I'll answer it. It might be wrong, but I'll give you an answer. So
I'll ask you a question.
All right.
See if I can stump you.
Okay. It'll probably be easier than you think.
Is it a good time to buy right now?
Is now a good time to buy? Are you talking about for a home to purchase and live in, or a home to invest in?
Invest.
So you want to buy a rental, or you want to buy a flip?
I would say a rental.
Okay. And you want to buy it here in California?
Sure.
Okay.
We'll say California.
All right. It's probably not a great idea.
Is that because prices are too high right now?
It's high. If you have cash, let's just say you have a bunch of cash sitting around, and you can afford to buy a property and you want to rent it out, you're probably not going to have a very big yield. You're not going to probably make a ton of money on it, but you could very well do it. You'll make something. You're going to get rental income each month, and you still have an asset. However, that asset within the next maybe 5 years might not be worth exactly what it's worth right now. It might be less. Of course, prices will probably come back at some point. So if you plan on keeping it for the next 30 years, it could be a good investment.
Sure.
You can always borrow against it if you ever want to leverage up a little bit. But there's other states that are probably better to buy rental property in right now.
Are there any states that you're looking at, or
Not me.
Not right now.
Not right now.
Okay.
I'm not a big out of state guy. There's people that come to the club that are big and out of state. We have a guy that does a lot of stuff in Ohio. Somebody that does stuff in Tennessee.
Interesting.
But yeah, I'm not an out of state guy. Not because I'm against it. I just don't really see the need to do it. I have plenty of deals right here in our own backyard in the Inland Empire. I don't have to go to LA, Orange County, or San Diego. I can stay right here.
I love it.
And do just fine. So, but if you want to specialize in Ohio,
Why not? Yeah, and then Then you can write off your trips to Ohio to go visit your long lost relatives out in Ohio.
Dayton or Columbus. I mean, there's so many places in Ohio you could go where relatives may be.
Maybe you were a LeBron. Oh wait, no, LeBron's back here now, so that's not going to help you either.
No. Yeah, back of the Lakers.
Yep.
They're not doing that well, are they?
I have no idea.
Why'd you bring it up?
Oh, we're getting the iffy.
They're doing iffy. The Clippers are doing better, I heard, which is kind of funny. Most people don't care about the Clippers, but maybe they'll start caring.
I don't know, man. If they're not gonna care now, they'll never care. The Clippers have actually been better than the Lakers for years now.
Oh, really?
Yeah.
That's Nick right there. He's our board op. He's
Hello.
the one. Yeah, he's the one managing all the phone calls coming in. Which, I mean, this board's been lighting up. We haven't been getting a lot of calls. I'm guessing these were terrible. We didn't want to take them, right?
Yes, that's exactly it. Yeah, if you call in, I'll be the voice, and I'll be the one who will misspell your name because I can't hear very well. So
There you go. Hey, you actually wrote Julio properly. Except
Yeah, I did.
thought it was Julia at first.
oh well, that's just my bad penmanship.
Hey, there you go.
I write like a 10-year-old.
It goes to show. Thank you, Nick. We
I have a
appreciate it.
10-year-old, and I can confirm that writing is equally as horrible as my 10-year-old's
See?
writing.
And I have a 10-year-old as well. And, it was comparable.
Oh, see, there you go. I'm not a liar.
Nice. Okay, so we should probably do at least one more tax-related question before the show's over.
Okay.
And I don't know what that is. No, the people that flip, we get a lot of these people because,
The club, you're exposed to so many people.
yeah, the Real Estate Investment Club.
If you haven't had a chance, this is Brook interjecting.
Oh.
If you hadn't had a chance to get out to the club and you're in the real estate market industry, if you're a professional, you need to go to the club. You're going to make so many connections.
Oh, he's right.
It's a wonderful event. I highly recommend it.
Once a month, yeah, we do it at the Mission Inn. Maybe I'll take a moment and explain it a little bit. We
Yeah.
kind of touched on it a little bit. The Inland Empire Real Estate Investment Club. We meet at the Mission Inn once a month, fourth Wednesday of every month. This month we're not doing a meeting because we're doing a Christmas party, or as we're calling it, the 2018 Winter Carnival this Saturday. It'll be a lot of fun. We're
So
doing
politically correct.
Yeah, the Winter Carnival. Yeah, we didn't want to say Christmas party because we don't want to exclude anybody. There's actually quite a few Jewish members, so their Hanukkah festivities are wrapped up already. So the Winter Carnival is what it's going to be this year. It's going to be a lot of fun. We got a DJ karaoke, catered. It's going to be in an airplane hangar at the Riverside Municipal Airport. Going to be a lot of fun. You can check that out on meetup.com. Look for the 2018 Winter Carnival under the Inland Empire Real Estate Investment Club. But we'll be resuming the normal monthly meetings next month, fourth Wednesday of January. I don't have the date in front of me, but it'll be a good time. Always get a pretty good turnout in January because people writing their New Year's resolutions, wanting to know if now is a good time to invest in real estate, which, it is. I mean, you can still make money in flips.
There's always money in flips. It's just a matter of buying right.
Exactly. And there's money in rentals, just not around here. I personally wouldn't really get involved in them unless you got a bunch of cash sitting around. That's the only way I would do a rental here right now. If you like having something close, cash is king. Or if you have a partner with cash and you just manage it for them, there's ways to do it. Your yields aren't going to be that high. Not like the kind of yields we were seeing if you bought in like 2009 through 2013. That would have been a much better time.
Oh, fantastic time.
So, Inland Empire Real Estate Investment Club. Go on meetup.com, look it up. You can find all the information there, find out about all the events we have going on because we have multiple events each month where you can meet other real estate investors and other people in the real estate industry and, start moving on things and get to do your thing with real estate. It's a lot of fun.
How many people normally show up to those meetings?
So at the big meeting, we usually get anywhere from like 100 to 150 people.
And generally all within the industry.
Yeah, they're all in the real estate
Yeah,
world.
that's a fantastic meet and greet
Oh, it's huge. Yeah, I mean,
to make connections.
Really the Inland Empire Real Estate Investment Club is one of the largest by attendance of all the clubs that are in Southern California. The only one that probably outpaces us on attendance is one in San Diego called the Creative Real Estate Investors Association or something like that. They get probably about 150 to 200 people at theirs each month. But, it's down in San Diego. We're the only thing local that
I went
gets that
to
kind.
I went to one out in Orange County, and even out there they were talking about the size and the depth of the Inland Empire Club.
Yeah.
So yeah, you guys are Famous.
That doesn't surprise me. Did you go with Jim Keller to the OC Phoebe, I think?
It was.
That was the one.
Jim Keller. He's such a good guy.
Oh, yeah. Jim's a good guy. He's been a frequent guest on the show before. Many people enjoy Jim.
He's got a face for radio. So
he really
he's perfect.
does. Yeah, great face for radio. Yeah, he's got, lots of great things I could say about him, but he's probably listening right now, and I don't want to make him feel bad.
I know I shouldn't say that. He's actually devastatingly handsome.
He really is. Yeah, he was like the high school quarterback. He was like the all-star. He had all the girlfriends. Now he's a married father, grandfather now.
Grandfather, yes.
Yeah, and he's he's been a grandfather for a few years, but yeah,
he is a wonderful, wonderful person.
Mm-hmm. He is. You should get to know Jim. Fun guy.
You'll see him at the meeting if you show up.
Yep, on January. He won't be there at the Christmas party, though. He's going to visit his daughter in Texas.
Oh, fantastic.
So he will not be in attendance this Saturday, unfortunately. But I'll be there. Hey, you can come meet me. A few other people.
Just look for the guy in the flip-flops.
Actually, I won't be wearing flip-flops. There is,
Formal.
okay, it's not formal.
No tuxedos.
It's either you dress 80s or you dress as your favorite Christmas movie character. Is how we're doing this Christmas party. Last year we did pajamas, which was amazing. You'd be surprised how many, it was probably about 90% of the people that showed up came in pajamas. And these are people that, some of these people that came were, they got some money. These are not poor people. You kind of figured they were going to dress up.
That's kind of like a special glimpse, like an insight into their personal lives. What do they dress like at home at night?
Yeah, exactly. One guy wore one of those sets of pajamas where he has the buttons on the back. You can flap the butt part down,
Whoa, was it closed?
It was closed for the most part. I didn't see him all night, so I don't know what he was doing in the photo booth and so forth. But, I do remember he took advantage of that open bar. So I don't know if that flap stayed closed all
probably
night.
closed by the end of the night.
I don't
probably opened by the end of the night.
It's possible. I wasn't around when it happened, so we'll I'm going to call him after this and we'll find out.
Nice.
Yeah, it's going to be a lot of fun. Yeah, we're going to have a good time. But yeah, we did an ugly Christmas sweater one year. A lot of people, we just go, it's for fun. I mean, that's the idea. The real estate investment world, there's a lot of money floating around, a lot of tension, a lot of stress and stuff. So this is kind of like the one time a year we just sort of all
let our hair down
and have some fun.
I love it.
And, it's always a big blowout bash. So this year's going to be no exception. It's going to be a lot of fun. Writing all those checks was a lot of fun too. It's a very expensive part.
Oh yeah, that's the best part.
Yeah, the best part about it. I know, just watching all that money leave the account. But it'll be good. It'll be well worth it, and all the members have paid for it all year. So we appreciate it because the club doesn't make money. It was never supposed to make money. A lot of people thought that we got into it because we could put on these events and you charge all this money and stuff, and it's like. We charge $30. That's basically what we have to pay per person at the Mission Inn anyway.
Oh yeah.
It's not like we're pocketing all this money and going off and living lavish lifestyles.
Well, as your CPA, I recommend that you increase that fee and pocket some money.
You think so?
Oh, absolutely.
Well, don't I have to pay taxes if we start making money?
Oh, I'm happy to pay tax on money earned.
Oh, really?
Once again,
Absolutely. Hypothetical, yeah. Most people enjoy paying their fair share. I get it. Yeah. If you don't enjoy paying your fair share, that's just un-American. Un-American. I can't believe it. Yeah. Obviously, people want to minimize their taxes as much as they possibly can. So let's go over some fast strategies, maybe, because this is the end of the year, and people are going to be filing their taxes. Here in another month. You're going to start getting real busy here. That's probably why you were able to come on finally.
Yeah, this is my downtime.
Yeah, for like a month, and then it gets crazy again.
I actually file unemployment for a month. It's fantastic.
Do you get taxed on unemployment money?
You do, federally, but not state.
Really?
Yeah.
They actually tax you on that. It just seems kind of surprising to me.
They get you coming and going.
That's true.
Yep.
And during the whole entire time.
During the time, too.
Yeah. I know, like the first thing I did when I was born, I had to fill out a tax form, Actually, as it turns out, the doctor, they kind of slap you when you first come out. Well, apparently you turn to the nurses, and they got a couple in on me, too. Like, a real ugly kid.
That's why you do radio.
Yeah, exactly. That's why I'm on the radio now. I tried to get my own TV show, but NBC was like, no. We got a radio show for people like you. So, thanks. No, we appreciate NBC and everything they do for us. Yeah, we really appreciate it. Anyway, so back to
so your question, tax strategies for the end of the year.
Yeah, for the end of the year.
There's a lot of things you should do if you have the option the availability to defer money into a 401k plan. If you have a job, W-2 job where you have an employer who has an employer-sponsored plan, max that out before the end of the year if you can.
Okay, because
strategy number one.
I just signed up for the company 401k, but I'm kind of worried because I don't think I can run that far.
That's a long ways.
It is.
Yeah, that's right. Rim shot.
Yeah, exactly. I had to throw that in there somewhere.
I like it.
I've been sitting on that one all year, just waiting for the right up.
This was it. That's why
that was my chance. That's
you
why
invited me in specifically for that joke.
That was So that's all the time we have for today. So 401k is obviously a good thing if you're employed.
Yeah, most companies will offer a match, and that's free money.
And what's the maximum you could do if you're I know it's different if you're married or single and so forth.
401k is irrespective of your marital status. It is actually more dependent upon your age. It's discriminatory.
It is.
So it's $18,000 this year if you are under a certain age. I think it's 50. I should know, being in the industry.
Right.
It's $18,000 if you're over the age 50 or something like that. It's an extra $6,000, so you can do $24,000.
Okay. If you're over the age of 50, I
think it's 50.
Okay. So somewhere in there, but you should probably check with your.
I'm self-employed. I don't have a 401k plan.
Neither do I.
Yeah.
I didn't really sign up for the company 401k. That's a long way to run.
That is a long ways to run.
So you can walk it, but
definitely max out your 401k plan.
Yeah.
If you don't have that option and you're self-employed, like Todd and myself, you can contribute to an IRA. You have until April 15th for that.
And the maximum for that is
$6,000,
which is
$5,000 if you're young, $6,000 if you're old.
Okay.
I think once again, I really need to go to a tax update class because I know absolutely nothing.
Right.
I want to preface all my answers with this.
This is for This is for entertainment purposes only.
Entirely for entertainment purposes. In fact, if you come to my office, you will see I know nothing.
Right, exactly.
This is not a solicitation for work at all. So
no, definitely not. You're not giving out your phone number at all, are you?
No, sir.
Okay, so maxing out your 401k, contributing to a self-directed IRA, or even just an IRA in general.
Any IRA, get some money into a retirement account. Pay yourself first.
What about a SEP?
SEP as well. SEP is a little bit different, but yes, absolutely. Max out your retirement options.
Okay, so that would be like your health savings plan, your children's college funds. I'm like stretching here.
I would definitely go for things that you're going to get a tax benefit for.
Okay.
First.
Got it.
Your retirement plans. Stick with your retirement plans. The next step, look for any options you have to donate to charities. If you're into charitable giving, now's the time. Especially this time of year, people are really looking for donations.
Right.
And contributing to a qualified charity is going to help you tax-wise, and it'll also help those entities with their operating budgets.
And a qualified charity would be somebody that has like a 501c3.
501c3 designation to where they're able to accept that donation, give you a donation letter, and not leave you hanging to dry with the IRS.
Right. Yeah. There's some other cool ones I found out about. We were actually talking about creating a private club in City of Riverside, and you can file for a different one. It's like a 501c4
or something like
I think.
that.
Yeah. I was like, I didn't know this existed.
There's multiple designations for a qualified charity.
Yeah.
Yep.
So
absolutely.
A qualified charity would be one of those 501c somethings.
C somethings. Yep.
C1 through 9 or whatever they are. I don't know. So that's obviously a great way to kind of write off or like reduce your taxable basis or all those things.
It's an itemized deduction. So once again, if you itemize, usually if you own a home, you're going to be itemizing because of the mortgage interest and property taxes. Your charitable donations will increase that as well.
Okay. Let me ask you something because it just popped in my mind. When it comes to an IRA, so there's traditional and there's Roth, right?
Yep.
Traditional would be coming from pre-tax dollars.
Correct.
And Roths come from post-tax money you've already paid tax on.
Yep.
If I claimed as exempt on my taxes, with my W-4 income, if I claimed exempt, if I contributed to an IRA, is it have to go to a traditional then because I didn't actually pay tax on it? Or is this just a oddball question that only I could come up with?
Right. Those really don't have to do with each other.
Okay.
So if you claim exempt, meaning you didn't withhold taxes on your tax return, first and foremost, you're screwed. Second of all, you Your contributing to an IRA is going to lower your tax liability. So let's go back to the police officer who made $50,000.
Okay.
Let's say he made $50,000, went exempt, had
Went
nothing
exempt.
withheld.
Okay.
Um,
And start contributing to his IRA.
If he contributed to an IRA at the end of the year, he maxed it out at $6,000. He went from $50,000 taxable down to $44,000 now, which helps out quite a bit.
Okay.
He'll pay tax on only $44,000 now, which is good. I mean, it's better than paying tax on $50,000.
Sure. Yeah, it's 6,000 less than
6,000
taxable.
less.
Which if we were going off that 10% tax bracket, he was
Save
in earlier.
$600 right there.
That's nice. That's a
Paid himself.
he paid himself.
Yep.
Yep, $600. But if he went exempt, he would have to cough up all that money.
The rest of the money.
So the fact that he contributed to an IRA, he could have designated Roth or traditional. It wouldn't have really mattered at that
No,
point.
that's a good distinction. So had he designated it as a Roth IRA,
Which would be for post-tax dollars.
after tax dollars. So he's using after tax dollars. He doesn't get that write off. So that $50,000 stays at $50,000.
Okay.
He paid tax on that full bore right now.
Okay, so basically the $600 savings that he would have made
Is gone.
if he were to do something like that. Hopefully he's making more than $600 off his $6,000 to
Yep.
justify doing something like that.
And John, who just passed us on the 10 freeway, is turning over in his car right now saying, a Roth IRA is the best thing in the world. He's right.
He is right, because you never have to take a mandatory distribution.
Number one, no RMDs, required mandatory distributions.
Required minimum distribution.
Yeah, you throw out mandatory.
I
and it
said
got stuck in
mandatory,
my-
yeah.
Required minimum distribution. There's no RMDs for a Roth IRA, number one. And number two, you will never pay tax on any of that money. The
you gain.
principal you put in, the gain.
With some
it's-
exceptions.
You already paid tax on that
Right.
principal. So
But there are some exceptions to that, right? With like,
if you take it out early or anything like that. Yeah.
well, and also if you're running a business on that money or something, don't you get hit with a
Okay, the UBIT, the unrelated
the
business
UBIT.
income tax. Yeah,
Yeah.
so depending on how you're investing that money, you potentially could pay tax, which is easy to get around. I don't want to say get around taxes, but it's easy to figure out how to use that money in a way to structure that
There you go.
transaction to where you're not paying tax.
I like it.
Absolutely.
Okay. Yeah, so because that's something that all the self-directed IRA people talk about is the UBIT, and
The
like
UBIT, yep.
you need them as your self-directed IRA custodian because
They'll help you figure out how not to pay. Yeah.
precisely.
And they're good. The self-directed IRAs are fantastic. It's a phenomenal tool that you can use to buy real estate, to do non-conventional investing.
Right. You just can't buy art or I think it's precious metals, and you can't buy like wine or liquor or something like that with it.
There's certain restrictions on how you can use that money. It's all governed under, I think it's Publication 590 or something like that under the IRS code.
Yeah, it's out there somewhere. Find a good IRA custodian; they'll help you figure all that stuff out.
And
make sure you're
also
not,
definitely find a good CPA who will be able to advise you on that.
of course, because you don't want to make these decisions completely on your own,
Yeah.
and you don't want to make them based upon anything we've said today.
No, absolutely not.
Yeah, make decisions after you talk to your professional people, not us.
Yes,
We're just a couple guys with a couple good faces for radio.
that's right. We've definitely got the faces for radio.
Man, I think I've made that joke on just about every show.
Every
now.
show?
Yeah, I think so. Yeah. It
Yeah.
doesn't get old.
It's
I
been
still love
confirmed.
it.
It's been confirmed every show. They actually have a scorecard inside. a
Is that what
calendar.
that was? I was wondering what that thing was.
Yep.
You guys out on the wall. I thought it was days you were locked into that room.
Happens to be only Thursdays.
Yeah, it's only on Thursdays from 4 to 5. I like it.
It's actually the tally that we keep for everyone at the studio who makes that joke.
Oh, got it. Okay.
You
Well,
you take up a big portion of it though.
right. Yeah, I'm that boxed in area with the dark border around it.
Yes, you have your very own number.
All right. Well, that was Nick, and that was Brooke. Brooke, I want to thank you so much for coming on the show
Oh,
today.
my pleasure. My pleasure. Thanks for having me.
Yeah, and thanks for the people that called in. We really appreciate you tuning in. And you don't want to plug yourself at all?
No.
Okay, then
You can
don't.
find me online if you really need me, or contact Todd.
Okay, contact me. I'll hook you up with Brooke, and if he's available, which I know you're very busy, so
Super busy. We will take referrals off of if it's from a friend or family member.
absolutely.
But it's very rare.
All right. Well, thank you all for tuning in. We'll see you again next week, and have a great week, everyone. Take care.